Hello, and welcome to the FMLS Market Intel Report. I'm Leslie Appleton-Young, Chief Economist for FMLS. Today, I'll be wrapping up 2024, now that the final numbers are available, and comparing our local markets to the regional and national data. Headlines about the housing market grab eyeballs, but often miss important details in our local markets, which are often very different. We all know the answer to the proverbial real estate question: what is the most important factor to consider when buying a property? The answer: location, location, location. So let's dive in. For all of 2024, NAR reported 4.06 million existing single-family homes sold, a slight drop of 0.07% from 2023, and the lowest since 1995, that's 20 years almost, when 3.85 million homes were sold. Compared to 2023, the year ended with more inventory, 1 million single-family detached homes nationally, higher prices, a median of 410,000, higher months of supply, and the days houses spent on the market was higher as well. In short, we just closed out the second year of sales constrained by higher mortgage rates, low inventory, remember the lock-in effect we've been talking about, soaring insurance costs, and daunting affordability hurdles. Let's put this in perspective by looking at 1995, and it's a dramatic comparison. Sales are very close, and yet there are 75 million more people living in the United States today and 33 million more households. Inventory today is 0.58 million units below 1995, and the months of supply is a full month lower. The NAR Housing Affordability Index, the HAI, was 99 last year and 126.9 in 1995. As you probably guessed, the higher the index, the more affordable the housing. A few other comparisons are worth mentioning. In 1995, the average mortgage rate was 7.93%, and 42% of the buyers were first-time buyers. Last year, the share of first-time buyers hit an historic low of 24%, with rates that were a full percentage point lower. In the last 30 years, the average age of home buyers has also increased from 31 years to 38. Finally, back then, homeowners on average stayed in their home 6 to 7 years. That was the benchmark. Today, 13 to 15 years. Simply put, today's market is unusual, perhaps even extreme, compared to the mid-1990s. How does our local market compare to what we are seeing nationally? And first, I'm going to talk about the greater Atlanta area. So for the greater Atlanta area, last year there were 42,333 closed sales, an increase slight of 0.8%. New listings came in at a little over 67,000, an increase of almost 17%, and the average sales price was $555,763, an increase of 4.8%. So that's the greater Atlanta area. You can see the market's general trends along with the variation in the level and the direction of activity. I'll be looking at locations throughout the FLS market area in future updates, identifying trends and opportunities throughout the region. As they say, the devil is in the details, and in this case, it's the opportunities that are in the details. Take a look at market intel on the FMLS website to access the most current and detailed market statistics. They are updated weekly. So if you are interested in resources relevant to our market dynamics and want to dive into local markets, we've got you covered. For FMLS Market Intel, this has been Leslie Appleton-Young. See you next time.